Bloomberg Tech is live from the heart of Silicon Valley with Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, OpenAI held early-stage discussions about giving the US government a 5% equity stake, according to reports. We have the details. Plus, Tesla's delivery numbers jumped 25% from a year ago, beating Wall Street's expectations by a wide margin. And we're joined by Judson, Althoff, CEO of Microsoft's commercial business, to talk forward-deployed engineers. Let's get to our top story. OpenAI has held early-stage discussions about potentially giving the US government a 5% equity stake. That's according to a report in the Financial Times. CEO Sam Altman is said to have held discussions with President Trump, US Commerce Secretary Howard Lutnick, and US Treasury Secretary Scott Bessent. Bloomberg Senior Tech Editor Mike Shepard's with us from DC. Again, this is a FT report. Bloomberg's not yet verified that reporting or done its own report. But the idea of stakes in technology companies, and specifically in frontier labs, is come up with this administration. Let's start by recapping what's in that FT report.
Well, looking at the FT report, the biggest headline in it is the 5% stake. You know, this is an idea that has come up before. Even President Donald Trump has indicated he embraced at least a vision for giving the government a piece of the action in these companies, but he hasn't gone into specifics. And they never really talked about just how much the government would actually acquire or hold in these ventures. But the 5% is new. It's unclear, Ed, how advanced these discussions are with the government. Sam Altman was here in Washington last month, where he met with some administration officials and brought the idea up again. It also came up during a visit to Capitol Hill. And this was an idea that was floated by OpenAI to the administration back in early 2025. So it's been kicking around. And back in early 2025, you'll remember the president did sign that executive order trying to set the stage for creating a sovereign wealth fund. That proposal hasn't really gained much traction here. It's quite complex and probably would need Congress to get involved.
At that time, in February 2025, the president was saying, well, many other nations have a sovereign wealth fund. The United States should have one. And he specifically talked about the idea that that would be the vehicle for a U.S. stake in TikTok. That was the case study, I think, that the president gave. In the FT report, there is a broader idea, which is, it seems to be the pitch from OpenAI to the US government is the US government should do this with a broad range of AI companies, but they're not named.
Well, that's right. They took pains not to name the companies, but it is an idea that Sam Altman has been pushing. And it's really less, say, a sovereign wealth fund, but more a public benefit fund. And that's akin to a proposal that we've also seen from Bernie Sanders, who has called and even proposed legislation that would put a one-time 50% tax on the top AI labs, using their stock and then taking the proceeds to seed this public benefit fund. And the idea would be twofold, Ed. The goal would be to get the government at least some skin in the game to feel like it has some responsibility in the development of this technology, but then also to use the fund to redistribute the benefits of AI more equitably across the society and address some of the concerns that we have seen raised, especially recently with the oncoming wave of IPOs from OpenAI and Anthropic, that perhaps there could be a new generation of billionaires minted from this and increasing the gap between the rich and the poor in this country.
Bloomberg Tech has gone out to OpenAI, the other AI labs, the US government, to comment on this story. Haven't heard back yet. Bloomberg's Mike Shepard, thank you very much indeed. Anthropic may be the latest AI company designing its own chips. The Information reports that the startup is in early talks with Samsung to manufacture a custom AI processor. It's the latest sign AI companies are looking to diversify beyond NVIDIA as demand for computing power continues to surge. Again, we'll track that story. Staying with chips, it's not just AI companies rethinking their supply chains. Apple is also exploring new sources for critical components. According to sources, the company is in talks to buy memory chips from 2 Chinese suppliers that are on the Pentagon's blacklist for use in devices that are sold in China. The discussions are ongoing and no deal has been finalized for more. Bloomberg's Maggie Eastland with us, also in DC. Really, really detailed reporting. There are slightly separate issues here, right? There is the supply constraint that is memory. There is getting US approval to do something. And then the main point that I just read, securing memory chips from a Chinese supplier for use in that market, devices that go to China. Start by bringing us the reporting.
Right, Ed. A lot of nuance here. So one thing to note is that this Pentagon sort of watch list does not actually directly restrict Apple from purchasing memory from these two Chinese companies, CXMT and YMTC. However, it would be seen as potentially political mismaneuver if they weren't to go ahead and get the U.S. permissions, since the Trump administration has already shown they have some concerns about these memory companies being connected to the Chinese military. So the pitch here, and we've reported that Tim Cook has reached out to Treasury Secretary Scott Bessent because Apple has been forced to raise prices due to the memory shortage. So the pitch here is that the shortage is so intense, maybe the U.S. should let up on some of its restrictions on these Chinese memory companies.
Maggie, this is your reporting with the team, right? And it's based on sources explaining the situation. What has Apple said and what has the US government said about our report?
Look, I think the best evidence we have here is that Tim Cook went to Scott Bessent, obviously someone who cares a lot about inflation. Apple has also been talking a lot about this, talking about how memory price increases are driving the price increases for things like laptops and iPads, as Mark Gurman has reported and who's also helped on this report. So I think the pitch here is that even though the U.S. government might have some security concerns, maybe it makes sense to allow Apple to purchase Chinese memory in these scenarios just because the price of consumer electronics is increasing so rapidly. But of course, there are going to be China hawks in Washington who have concerns about this. We included in our report from Chairman Brian Mast, who leads a committee here in the House that oversees foreign affairs. And he is very against this move and is advising the Trump administration not to do this. So we're certainly going to see a fight here in Washington over this.
Bloomberg's Maggie Eastland, thank you very much. Coming up, Tesla surprises Wall Street with the strength of its second quarter deliveries. Cox Automotive's Director of Industry Insights, Stephanie Valdez Streaty, back on Bloomberg Tech. Stock, kind of interesting reaction here. We'll get to it. This is Bloomberg Tech. Tesla's released its vehicle delivery numbers for the second quarter. The EV maker delivering 480,126 vehicles globally, outstripping analyst estimates by more than 20%. I think this is the best second quarter that they've ever had. The stock is down almost 7%. It's on track for its biggest drop in almost a year. So that's an interesting market reaction to that news. Joining us is Bloomberg's managing editor, Craig Trudell. So, this was way ahead of consensus. It's a change in the trajectory of what's been happening with Tesla's vehicle sales story overall. What else do we need to know? What else do we know from the limited release the company put out?
Yeah, ahead of competitors with the one big exception of BYD, but I don't think that that's something to really get, sort of too hung up on. This is a release where the numbers are great. I mean, it's I think the expectations were low going into this print. That being said, we did see, 4 sessions where the stock ran up 13%. So when you kind of, just pan back maybe over the last week, is this move quite as dramatic as it looks at first glance? Maybe not. But I think, the big takeaway here is that Tesla's vehicle business is recovering, and also that maybe the first quarter on the energy side was maybe a bit of a blip. It was quite disappointing, their energy storage deployments. And in the second quarter, we saw a pickup that was fairly substantial.
The limited sell side commentary is that, Europe and China seems to be improving for Tesla. Compare and contrast, Rivian is up 10%. And Rivian, that's kind of cut back its annual forecast for delivery and production, has now raised it again. What do we know?
Yeah, I think with Rivian and also with Lucid, which is out with numbers this morning, I think the bar has been set much lower for them because they've had so much of an issue with kind of chasing Tesla, right? I think there were expectations when these companies went public, in Rivian's case by IPO, in Lucid's by way of SPAC deal, there were expectations that these companies would sort of, take on Musk in a much more meaningful way. But we've really seen them struggle to gain traction. We're seeing this morning more sort of moves at the executive level for Lucid. And with Rivian, I think, there's a lot of hopes and anticipation of the R2, this, lower cost platform that's coming to market. And if this company can execute better with these lower priced vehicles, it unlocks maybe much more of a market for this company going forward.
Bloomberg's Craig Trudell, thank you very much. It's a story that definitely merits more analysis and discussion. Stephanie Valdez-Streaty is the Director of Industry Insights at Cox Automotive and joins us now. Let's start with the Tesla number. I mean, we are comparing it to an average of analysts' estimates. And so from that standpoint, it was a massive surprise. The other way of looking at it is the most vehicles they've ever delivered in a second quarter. Is there anything that you see that explains it?
Yeah, I think, the market was expecting some stabilization, which we got, but then Tesla actually delivered some acceleration. And when I look at the market, I think if you look peel the onion, it's the European market. That's really, I think, helping Tesla in Q2. Our estimates for Q2 in the U.S. are Tesla down sales 20% year over year and about 2.2% quarter over quarter. So I think the European market is really driving sales for Tesla in Q2. And, it makes sense. The German, the French incentives came back. High gas prices, right? That's another tailwind that helped Tesla in Q2. So I think that's kind of looking at it broadly. That's what's really helped Tesla in Q2.
Yeah, the high oil price and gas prices narrative is very interesting. What you were talking there about, Europe relative to other markets from a regulatory or a consumer incentive standpoint is interesting. Where are we at in this kind of multi-speed market where Europe was ahead on adoption anyway? China was ahead and has a much greater proportion of new energy vehicle sales, but pure battery electric sales relative to the US anyway.
The US is like further in terms of China and the US. And I think the one thing in Europe, right, they have better infrastructure. They have the incentives coming back. China's kind of slowing down, but the Chinese OEMs, right, they're exporting to all these countries, so they're gaining share. And so I think they're providing a lot of affordable EVs. So I think the European market's going to continue to grow. I had a colleague post something earlier today saying in Australia, for the second month in a row, Tesla is number one. And so I think Tesla's it's finding its way to kind of beat out some of the Chinese OEMs, but I think there's a lot of competition. If you look at the second half of this year, they're going to have to contend with that as well in both Europe and China market.
Stephanie, I looked a little confused for a second there because we lost your microphone just for the first 5 seconds of your answer on that. But I think we have you back. Worry not. Right now, I think there is a big focus on probably still consumer spending power and affordability. So you had told us that your data pointed to a Tesla sales decline in the United States market. What's the bigger picture of the US auto buyer right now?
Although the price premium between a new EV and a new ICE vehicle has gotten to about $5,500, so the lowest it's ever been. But that's more about a product mix. But I think looking forward to the rest of the year, you have some more affordable EVs launching. You have, Toyota has a CHR, the Woodland has come out. You have Subaru launching a couple. So I think there's some new product coming out. But at the end of the day, I think getting that monthly payment down is the biggest prohibitor for any vehicle, right? And especially for EVs where there's still a price premium. So I think at the end of the day, we need more affordable EVs launched in the US, and that's going to help. Fortunately, we're seeing infrastructure growth, so I think that's a positive sign. But once again, I think the affordability continues to be the theme throughout the automotive sector.
Director of Industry Insights at Cox Automotive, Stephanie Valdez-Streaty, back on Bloomberg Tech. It's been great to have you. Thank you very much. Another news story, Uber has dismissed 2 tech leaders at its nascent AI data labeling business, shaking up a key division that the ride-hail company is positioned as a key growth driver. Uber says the departures are part of a broader leadership transition at the division. The unit, which launched in 2024, uses a network of gig workers to handle tasks needed for preparing data to be used in AI models. Okay, coming up, we're going to take the pulse of tech markets with Fiona Cincotta from City Index in what is a short week here in the United States. 4 trading days, but a lot to discuss. This is Bloomberg Tech. US hiring slowed sharply last month, with non-farm payrolls rise by just 57,000. The jobs market is facing headwinds from the Iran war, but also downbeat consumer sentiment. When it comes to tech's impact, these figures show manufacturing and construction jobs rose, possibly linked to the AI build-out, while, as we discussed yesterday, big tech firms have been cutting roles to offset AI spending, kind of competing dynamics. This is what markets look like and how the technology sector has kind of reacted in part to that jobs data. The Nasdaq 100 is down 1.4%. The Philadelphia Semiconductor Index, or SOX, is down 4.5%. We've seen big swings in both directions on the SOX for a couple of weeks now. We're on track for back-to-back weekly declines on the SOX. For the first time since March, the Nasdaq 100 on the week still up a percentage point. I say on the week, it is a short week. It is a holiday in the United States tomorrow, Friday, July 3rd, because of the July 4th holiday. The SOX down 3.4%. And as I said, back-to-back weekly drops. Again, a shortened week. Let's get more on what's happening in markets. Fiona Cincotta, City Index Senior Market Analyst, joins us. I guess let's start with the moment in time that was the latest economic data. And what I did not say in a bit of a ramble just then was, now the market's recalculating what they think the Fed will do this year, pushing back the idea of a hike to December. Why is that important?
So, the fact that we've got the market getting a little bit more lax about what the Federal Reserve could be doing with interest rates is sort of helping investors sort of reassess where they're positioning. And the reason this is important is because when you have higher interest rates, you often find that this weighs on high growth tech stocks, just because of their future valuations. So they're less valuable in the future if we've got higher interest rates. Now, the fact that we've got those interest rate hike expectations decreasing is usually beneficial for tech stocks. So we would usually expect that to see an increase in the tech stocks. But that's, interestingly, is not what we're necessarily seeing today. And I do think that this is potentially related to, some concerns over that sort of AI trade, the really strong rally that we've seen in memory stocks and chip stocks, in tech stocks. And, we're seeing some profit taking. As you've mentioned, we've seen a couple of weeks now where we've seen some lower closes. And I think this is all just coming ahead of earnings season. I think we're just seeing this recalibration, a repositioning, because obviously, investors are nervous that there is a potential for this rally to have overextended. And so I think that's what we're seeing play out right now.
One of the drivers of this market has been semiconductors, but in particular memory. And something that keeps coming up time and time again on the show is that if you take Micron as a case study, it's quite reasonably valued, based on forward 12 months price to earnings. And the question for everyone in the market is, well, what happens next, right? Does it continue to go on the run that it has been? Is that where you look, kind of at a sort of fundamentals and valuation level?
Yes, I think you've got to take into quite a few things into account here. You look at the fundamentals valuation. You also need to look at the technicals. Is the rally overrun? Is it in overbought territory? But then we've also got to have a look at the bigger macro picture as well. As we've talked about here, the potential for Federal Reserve rate hikes or not, I think also does have some sort of implication in where we are. So, taking all that into account. But I mean, what we have seen, as you said, is this phenomenal rally in the memory chips, memory stock, chip stocks as well. And so I think there is naturally going to be pullbacks. I mean, we know these stocks don't just go up. But if it is considered to be reasonably priced, which is what we're seeing right now, then that does leave a potential for further gains.
Another big technology news story today. SAP will cut back hiring and travel to save costs as it devotes more resources to developing AI and fending off new competitors. According to an email to staff from the executive board that was reviewed by Bloomberg, SAP will, quote, exclusively focus new hiring on selected profiles only, mainly core AI roles that are critical for our long-term success, end quote. Fiona, I wanted to do that news story because I think it's something that's crossed your desk this morning, right? And that you have seen in the news cycle. What do you make of that, particularly in a European tech context, as a case study?
Yeah, so I think this is really interesting because, I mean, there's very much a focus, I think, of, how are businesses dealing with these increased costs? How are they going to balance them out? And what it means for hiring as well, from a personal perspective and for people looking for jobs. So the fact that they are looking to sort of rein in spending in one area in order to be able to focus on, that AI related investment is really interesting because obviously that's what we do want to see. We can't just continue to spend without the means to doing it. But also this idea that they are going to continue hiring for very AI specific positions, I think is really key. And I think this is just something that we are sort of thinking about more broadly is, what does employment, what does hiring look like in this sort of new AI world? And there have obviously been some sort of changing perspectives. Does it mean loads of layoffs? Such as Oracle, we've seen them laying off staff and citing the reason for job cuts as AI. But then you've also got Federal Reserve Chair Kevin Walsh yesterday, who was actually suggesting the opposite, that technical innovations have the potential to lift productivity and increase employment. So this is definitely sort of an argument that we're looking at. But for SAP to hear that they are actually making clear decisions to going towards AI, I think should be a good thing for the company.
Fiona, Cincotta, City Index, thank you very much indeed. Now, coming up, Judson, Althoff, CEO of Microsoft's commercial business, is joining us. They're making a $2.5 billion bet on forward-deployed engineers, FDE. We're going to discuss that next. It's halftime here in San Francisco. Do not go far. We've got so much more to come in the show. This is Bloomberg Tech. Welcome back to Bloomberg Tech. We're taking a very quick look at shares of SpaceX. It's kind of been interesting to track what has been up and down and a little bit sideways trading. $158 a share. Remember, this is an IPO that priced at 135. The opening trade was 150. And now we're getting more information. One of the key questions asked about the Elon Musk-led company: is it valued properly? Next week, investors may get a clearer picture when a host of new research, price targets, and growth estimates come out from the banks that worked on the IPO. Bloomberg's Carmen Reinicke is here with the deets. Carmen, what do we need to know?
Yeah, so what we need to know here is just exactly how Wall Street is going to justify this huge valuation that we're seeing on SpaceX. So we have a little bit of an indication here, right? We've gotten some analyst research in the weeks since the blockbuster IPO from banks that were not involved in that process. So we know now, we can see that the price to sales ratio for SpaceX, which has always been quite high, is trading much higher than its peers, even ones like Palantir, and a software defense company that has often called out as having one of the highest valuations in the S&P 500, and Microsoft. So, for example, Microsoft trades at a much lower price to sales ratio than SpaceX and is expected to bring in about 10 times the revenue this year as SpaceX, which is about $36 billion for SpaceX, more than $300 billion for Microsoft. Something that is key here to these large valuations is explosive revenue growth that Wall Street is seeing. So our own Bloomberg intelligence analysts see that SpaceX could swing to a slight profit by 2028 and see its revenue growth go up more than 800% by 2030. So other estimates that we're seeing so far are seeing this more than quadruple into 2028 as well. And this is really going to be key to what we're looking at when more of these estimates and analyst reports come out next week. So it should be Tuesday. That's 25 days since the IPO. This is when the quiet period ends. And the most important things that we'll be getting are, analyst research from banks that underwrote the IPO. So that includes Goldman Sachs, Morgan Stanley, Bank of America, JP Morgan, and 18 other banks that participated. Back to you, Ed.
I wonder if they'll be bullish when they come out with those reports. Bloomberg's Carmen, Reinicke, thank you very much indeed. Microsoft is mobilizing 6,000 people in a new unit aimed at helping enterprise clients better utilize AI. We're talking forward deployed engineers, FDE. It's a step we've seen from other tech firms quite a lot recently. So what's driving the move? What impact does Microsoft hope to see? Judson, Althoff, CEO of Microsoft's commercial business, joins us from Microsoft's campus in Redmond, Washington. I think the best place to start with this, Judson, is what was Microsoft trying to solve for, right? What was identified among the very diverse and wide base of customers that Microsoft has that would say, okay, we actually need these people to go in and do this?
Well, thanks, Ed, for taking the time today. I appreciate it. We're really excited about the launch of Microsoft Frontier Company. The aim of the business is really to help customers drive frontier transformation across their businesses. It's about their outcomes, about them getting value out of AI while having intelligence compound within their organization so that they're taking control of the outcomes that AI drives versus the other way around. So we felt it was necessary to assemble a world-class team with the right skill, the right scale, and the right platform to drive these outcomes.
The bearish view on this is that those companies just haven't been able to work out yet what to do with AI. Is that fair?
I think the thing to really grasp here is that AI has to serve the business. It has to serve business outcomes. It's less about deploying FDEs to just simply drive AI adoption, but rather infusing the right level of skill around industry expertise, around change management and continuous improvement, and then, of course, world-class AI engineering. That's what's really different about what we're doing with Microsoft Frontier Company. Sure, we're going to put a lot of great engineers on the ground at customers to help them with AI, but we're first going to be methodical about making sure that the AI solutions that they're building are really driving business outcomes and that are infused into the way they work. AI has to empower human ambition, and it has to empower AI outcomes for customers. And that's where we're really focused here. That's differentiated from how others are approaching this.
That different from how others are approaching this is really interesting. Like, I talk to a lot of FDEs, all kinds of companies, that they would probably point out, right, that there is a distinction between forward deployed engineer, the noun, and forward deployed engineering, the verb, right? What the actual outcome Microsoft's trying to affect is. So I think that the question I have for you, Judson, is how much is this a go-to-market enablement and strategy for you guys, or is it a way for you to build out a product, a specific Microsoft product?
It's a great question. I'm really glad that you asked that because it's super important to understand how customers get value out of these types of investments and, frankly, what's left behind. We're really, really focused on our customers' intelligence and their outcomes. So every bit of work that we do at the face of the customer is going to be about compounding their intelligence and their unique value. So any IP that's built, any data and semantic context that's derived, the evaluation thinking, all of that belongs to the customer at the end of the engagement, which is fairly differentiated here. Again, the skill sets required to do this, I think, are quite unique. We've got folks that have been in banking for 20 years, in retail for 20 years, energy, life sciences, getting to the meat of what customers actually need to achieve with their business, putting the right folks on the ground that actually understand how to evolve the business process, getting the right AI capabilities in place, and then establishing a continuous loop of improvement so that, whether it's the supply chain or the finance organization or the HR organization, the agentic business flows that we're establishing continuously get better through model diversity and openness and optimization. And then what's left behind is really unique intelligence for the customer. Of course, if there are things that we have to do in the Microsoft platform to make our assets better to serve the customer, we're going to do that too. That's the unique linkage of the forward deployed engineering into the Microsoft engineering teams to better serve the customer. But really, at the end of the day, the outcomes that are delivered belong to the customer, and that's what's really unique here.
The composition of that 6,000 people as a group, I find that fascinating. You're saying that this is a $2.5 billion investment into what is a unit, but I think we've spent a lot of time, Judson, as you know, talking about the cost of talent, particularly on the engineering side, and even on research. How competitively are you going to have to put together that group of 6,000? Where will you hire them from? You mentioned banks. I think the consulting firms would be a little fearful that they will have people go to this.
I think the thing to really latch on to here is the notion of model diversity. Customers understand the business processes that need to be evolved. And when I talk to CEOs and when I talk to their boards, it's super clear that they want to shift left and shift right, put the bulk of their employee skill in working on engaging with customers and developing new products, and then to try to automate everything in between. Through use of model diversity and having the right talent that knows how to select the right model for the right task, for the right outcome at the right price point is a super important skill. And so we're going to hire a ton of world-class AI engineers to add to the skill that we already have to meet the customer with where they are in terms of adopting all of this. So it's not about any one model. It's about choosing the right model for the right outcomes at the right price point. And the types of optimization that we can do with customers is really driving an impact. Customers are excited all the way up to the C-suite and into the boardroom around the opportunity here. And this is about putting scale in delivering those outcomes. Of course, working with our partner ecosystem as well, but really driving the tip of the spear engagement with our customers.
Judson, many would say that Palantir, pioneered the FDE role and deployment. What have you learned from how they've done it?
Look, I think Palantir is to be applauded for the work that they've done with FDE. I think for us, it's more than FDE. It's about having the right skills that actually understand the business and the business outcomes. And it's about having the right platform. Only Microsoft has a platform that has world-class AI assistants at the face of human ambition with our Copilot portfolio, and even with assets like Teams, where AI agents can come to life and collaborate with people around the business. We have a unique IQ platform that's model diverse. We support over 11,000 models so that you can start with a frontier model, optimize it, maybe use an open source model, fine tune it, get it down to the right outcome at the right price point to avoid the cost explosion around token yield. And then we have an observability platform that allows you to look closed loop at all of this, see every agent that's running in your environment, make sure that it's driving the outcomes that you want, make sure it's cyber secure, and make sure that the financial operations around the totality of the business flows are intact. So Palantir has done a great job with FDE. But again, that's only one part of the equation. You have to have this left to right platform that allows AI to empower human ambition and do it in a model diverse, open, and heterogeneous way across every layer of the stack.
Judson Althoff, CEO of Microsoft's commercial business. Thank you so much for joining us on Bloomberg Tech. Now, coming up, a milestone for AI and nuclear energy. Valar Atomic CEO Isaiah Taylor joins us after his company used an advanced reactor to power an NVIDIA AI chip. Just a single chip, but interesting nonetheless. This is Bloomberg Tech. AI's power demands are putting nuclear back in the spotlight. Now, Valar Atomics says it's the first company in the US to use an advanced nuclear reactor to actually generate electricity, and then it powered an NVIDIA Blackwell chip. It was a small demonstration, but it comes as the two companies announced a partnership to explore nuclear-powered AI systems. And actually, there's a bit more in there as well. Joining us now is Valar Atomics CEO Isaiah Taylor. I want to be transparent about the scale of the demonstration. but it was a number of firsts. Explain what happened.
Yeah, thanks so much for having me on, Ed. We're standing here right now in front of the War 250 reactor, where we just powered the NVIDIA Spark yesterday, the first ever advanced nuclear reactor to power an AI chip. And you're right, it was a very small demonstration. This reactor only makes 100 kilowatts. That's very intentional. It's part of our philosophy. We like to move quickly in small steps, right? So it's a small demonstration, but it is a big first. It's also the first time an advanced reactor has been built in American soil outside of the National Lab System. And yesterday, we actually became the first ever startup to make nuclear electricity. So a bunch of awesome historic things in a small demonstration. We're really proud to partner with NVIDIA to do it.
I think what is interesting about this is the technology itself, right? Could you just bring us up to date, Isaiah, on where the sort of technology stands today? I appreciate you've outlined it was a first, but the challenges of scaling, the benefits of using that technology relative to other energy sources.
100%. So, I mean, listen, nuclear has been around for a long time, and we've built these very large-scale plants that have made a lot of electricity. But the problem with them is that they haven't scaled very well. They take a long time to build. They use a lot of civil infrastructure, and these are things that we're not as good at in the United States anymore. So the philosophy of Valar Atomics is we want to build modular plants that are manufactured. And the other really unique thing is that they are high-temperature reactors. This standing behind us here, this is a high-temperature gas reactor. And those high temperatures are actually really good for both efficiency, but also for things like air cooling. So a lot of the power debate and AI scaling debate right now is how do we do this without having to tax local communities of water usage? One of the best ways to do that is just to raise the temperature of the reactor. This allows you to reject heat at a higher temperature, which means that you don't need water cooling anymore. And that was part of our announcement yesterday.
I want to stay with the waterless component of it. NVIDIA has been speaking publicly a lot about the economics of cooling through different technology sets. It is a big focus. They've tried to dispel some misunderstanding that's out there. How does your technology work in that respect, and how unique is it in the field?
Absolutely. There's two sides to this equation, right? We need to get the energy generation side to be waterless, and we need to get the data center cooling side to be waterless. And that's why this collaboration with NVIDIA is really exciting to us. We realized that we were both working on the problem from different angles. We're working on a nuclear reactor that doesn't need water cooling due to high reject temperatures. And NVIDIA has already been working on the data center architecture to do that. And so when you bring these two technologies together, this collaboration for a 30 megawatt data center with no water cooling needed to extract water from the local community, that's really what's going to allow us to scale. We think it is very important for the United States to win on AI, to win this scaling race, but we need to do that without taxing local communities of both power price and water usage. And so NVIDIA and Valar Atomics coming together in this collaboration is really solving both sides of that problem.
NVIDIA has historically made equity investments in all layers of the stack with the argument that they want to support the ecosystem to get them moving faster. Have you had any discussion with Judson or with NVIDIA about the idea of there being a financial relationship between Valar and NVIDIA?
I can't announce anything on fundraising today. We have a lot of work to do here that we're focusing on, and a lot of awesome capital providers behind us allowing us to go do that. But what I will say is that this collaboration is focused on how do we take the next step of scale, right? I think that NVIDIA has done a lot of fundamental work on scaling the compute side and the architecture and their DSX architecture. They've done a lot of this really fundamental work on scale. And we know that energy has been what is missing. Natural gas is going to be a bridge. It's going to be a good bridge, but it only goes so far, and we continue to have the climate change question associated with that. And so if we really want to scale, and especially outside of the pre-existing natural gas infrastructure in terms of pipelines, we're going to have to do that with uranium.
Isaiah, we just have 45 seconds to end. Demo 1, a single spark. What are the milestones that come next in terms of scaling the demo and infrastructure at different levels?
Yeah, Valar Atomics likes to take small steps quickly. We're going to go build another reactor. The next one is going to be a lot more powerful than this one. And we'll take the next step in demonstration on the compute side as well. So stay tuned in the next 6 to 12 months.
Amazing sort of visual and the sound behind you, Isaiah Taylor of Valar Atomics, with the technology literally in the background. Thank you very much indeed. Now, coming up, Palmer Luckey's Erebor Bank is in talks to raise funds at a valuation of $8 billion, according to Bloomberg's reporting. That story's next. This is Bloomberg Tech.
It's time now for Talking Tech. First up, SoftBank and its telecom unit will start renting AI computing resources to U.S. companies starting next fiscal year. They'll offer AI chips and cloud services to large customers, including hyperscalers. The move puts them in competition with companies like CoreWeave and Nebius and potentially Meta. Plus, NVIDIA is giving AI startups a new way to access computing power. Instead of paying the full cost up front, they'll give NVIDIA a share of future revenue. The company will do that by connecting AI data center operators with cloud providers, making it easier for researchers and startups to get the computing resources that they need. And Google has lost its long-running antitrust fight with the European Union and will now have to pay a roughly $4.7 billion fine. Europe's highest court ruled Google illegally used Android to cement the dominance of its search and Chrome apps by requiring phone makers to pre-install them. Ed.
Thank you, Yahira. Let's take a look at today's big number, $8 billion. That's the valuation Palmer Luckey's reportedly targeting for his new venture backed by investor Peter Thiel, Erebor Bank, a reference to Lonely Mountain of the Middle-earth world of Tolkien's mind. According to sources, the startup's looking to raise fresh funding at a valuation of at least $8 billion as it aims to build a bank focused on serving startups and the innovation economy. Bloomberg's finance editor Jenny Surane's with us. We've been trying to track this one for a little while. Palmer Luckey is, the face of it, but it's basically a nationally chartered bank. The valuation's interesting. What's the valuation based on? Like, do we know how this effort is going?
Yeah, so we reported today that they've seen their deposits actually quadruple in the last few months alone. So he's definitely seeing success and traction with the customers that he's acquiring. We also reported today that they've added about 400 customers in the last few months. It's important to remember that a lot of these customers are business customers, although we got an on-record statement from Palmer Luckey himself saying, these aren't customers that are just related to my businesses. He is seeing a much broader uptake. And, we've seen a lot of interest in going towards these fintechs over the last few years. And we've seen a lot of fintechs from overseas trying to make their mark in the US. And so we're really starting to see some traction here. And it'll be interesting if we start to see some of the bigger banks, the JP Morgans, the Bank of Americas, start to fight back in any way.
The name, a Tolkien Middle-earth reference. There are many Peter Thiel-backed companies that have names from the Middle-earth world. Could you just go back to what you were saying a second ago? What is Erebor distinct from any other bank? Like, what is that makes it different, or a technology company?
I think we haven't actually seen a lot of these fintechs cater to business customers yet. And so for many startups, for many companies, their only option is really to go to the likes of a JP Morgan or a Bank of America. Those are the types of places that have built out, the suite of services that a business really needs as opposed to a consumer. And so a lot of these early fintechs, they start out with money movement or high yield savings or things that often really cater to consumers. Erebor is different. Erebor is looking to kind of cater to these, small business and business customers that bring with them higher deposits. And so that's why we've seen their deposits kind of take off so dramatically in the last few months. And it'll be interesting to see if they can kind of keep that momentum going.
Would just point out that, this is early stage talks. Technically, Erebor declined to comment on, I guess, the terms of the valuation and the discussions. But we got that on the record statement from Palmer Luckey. Go check out the story on the Bloomberg terminal and Bloomberg.com. Bloomberg's Jennifer Surane, thank you very much indeed. Before we let you go for the July 4th weekend, a quick look at what's been trending. Folarin Balogun scoring again, this time on Google Trends after the US striker and top goal scorer for the team so far at the FIFA World Cup earned himself a red card. If there's another tech story here, it's the difference between what the referee sees live and video assistant referee. Yes, VAR. Still, even a man down, the US team closed the game out to win 2-0. Tillman, free kick. What a baller. After their win here in the Bay Area, the US men's national team heads back to another tech hub, Seattle, to take on Belgium in the round of 16. Okay, that does it for this edition of Bloomberg Tech. Don't forget to tune in on Saturday, July 4th, for a special edition of Bloomberg This Weekend live from the Intrepid as America celebrates its 250th anniversary. Happy July 4th. Happy birthday, America. This is Bloomberg Tech.